Welcome to my channel. For those of you new, my name is Dave, and these videos are a mixture and journey towards financial freedom, financial well-being, so you, like me, can reach your goals sometime in the future. Now, it's not to boast or brag or say, look at me, but to give people hope. If I can build up a sizable portfolio, so can you by taking an action plan, invest on a regular basis. So let's look at this latest video. This video is about my personal pension, so my Sipp. Now, I do have a workplace pension, but I'm restricted, one, on the contributions I can put in each month, and two, the investments I can make. So I pick my own investments. So what are the aims of the portfolio? Well, annual growth of 10%. We're looking at dividends for the year of £7,000. I'm looking at a year-end portfolio value of around about £164,000. So how have we done during the month? Well, we started at 143,128. We finished at 144,940. So a profit in the month of £1,812. Year to date, 7.84%, which is very good, shall we say, comparison to FTSE 100 of about 1%, and the S&P 500 acted down this year to date. So no complaints so far. Look at the following graphic. We put monthly contribution of £250 in, automated on the first of each month. We just switch off, and we've got tax relief as a basic rate taxpayer of £62.50. And our platform provided charges fees for this month £17.09 based upon a percentage of our portfolio value. So a very good start to date. So whereabouts geographically are we held within the portfolio? So predominantly UK based. 79.2% in UK and Europe, 18.86% in America, shall we say, and 1.94% in Asia. Now we've had our best month of dividends so far. We received nearly £800 in a month. Now across our shares, we've got a yield of 5.03%. And let's look at what dividends we received in the month. So we received Barclays, £176.66, 70 new shares reinvested, so dividend will increase next payout. HSBC, £343.13, so again, 39 new shares. And our Fidelity World Index Fund, simple tracker fund, got a yield of about 1.5%, gave us £260.17. So a very nice month, shall we say. Year to date, we've struggled. We've got £876, well below expectations, but that will catch up in May when the big banks report. But as I said, we'll have good months and bad months, but that's the aim for the year, £7,000 during the year. Now let's dive in, shall we say, into the portfolio holdings. We'll do our shares and then we'll do our funds. The portfolio is primarily based in shares. Nearly £110,000 in shares, 76% of our portfolio, of which 67% is in the FTSE 100, so the top 100 shares in the UK, and 9% in the FTSE 250. We've got 15 shares, 11 in profit and 4 in loss. So let's look at them in, shall we say, some detail. Our largest holding is Aviva, nearly 5,000 shares, £27,000, nearly 20% of our portfolio, and it will give us a nice dividend in May, around about a yield of 7%. Just switch off, everyone needs insurance, but it has been on the growth spree, a buying spree lately. Has had some kind of turnaround in the last few years. We've got Lloyds, the banking group, nearly 37,000 shares, £23,000, 18% of our portfolio. It did struggle during the month, shall we say, with results, mainly through bad provisions, but very cash rich, and again, it will pay a very nice dividend, around about 4 to 5% yield in May. We've got HSBC, 1,244 shares, £10,500, 7% of our portfolio. It was done to get away from, shall we say, UK banks, but it is going for a turnaround, and it has had a good run lately. We also own Barclays, 3,212 shares, nearly £10,000, 7% of our portfolio. Again, very cash rich. Results were not great during the first quarter, but as we proved, a very nice dividend yield around about 4 to 5%. Now away from the banks, we own DRAS, the biomass or the pallet maker. 1,300 shares, £8,000, 6% of our portfolio, and again, very cash rich, been on a buying spree, very profitable, and it will give us nice dividends, shall we say, in May. Our best performing dividend, shall we say, is LNG. Gives a yield of about 9%. It will pay at the start of June. But we own 2,248 shares, £5,500, 3.7 of our firm, but it has struggled lately, shall we say. But we bought it for the yield, and just like Aviva, everyone in insurance, it's a growth company, big player. Two shares that have struggled recently, shall we say, is Shell and BP. We own 150 shares in Shell, £3,500, 2.5% of the portfolio, and BP, nearly £2,000, 1.5% of the portfolio. But they have struggled recently, shall we say, oil prices, cost provisions, shall we say. One share we do own, shall we say, is Sainsbury's, the retailer. 1,308 shares, £3,500, 2.5% of the portfolio, very good results, is cash rich, is going some kind of supermarket price war, but the results were good and the dividends increased, shall we say. And one share that's recovered lately is JD Sports. We own 2,500 shares. It's nearly making £1 billion profit, very cash rich, a growth company, does pay a small dividend, but it has struggled what's happened, shall we say, with Nike in the US. But it's £2,000, 1.5% of our portfolio. Now, other companies we know, shall we say, Penn and the Water Company has struggled, but it did give nice dividends. We own AJ Bar, the drink, shall we say, producer. Very good results, cash rich, dividend increase. We own AJ Bell, the platform provider. Assets under management increased. Shall we say, a very good growth company, does pay a small dividend. And we own Card Factory, the retailer, and it will give results out, shall we say, start of May. Very cash rich, dividends being increased, and it is expanding. It is, shall we say, one of the successors on the high street. So it just goes to show we've got a mix of portfolios, but all big names. We're not prepared to sell these shares for the next, which what we call buy and hold, but for my own personal opinions. But it just goes to show we'll have good months, good bad months, good shares, bad shares, but we've bought them mainly for dividends and it reinvested. If you like the videos, smash the like button, subscribe to the channel. Now let's look at what funds we hold within our portfolio. Our funds are somewhat simple. We've got two funds. Makes up 24% of our portfolio, nearly £35,000. Just switch off, no real risk, I would say. Average returns about 8-9% against one fund, but it was done for diversification because we were solely UK based. Now we own our largest fund is Fidelity World Index. Nearly £20,000, 14% of our portfolio. It's got low fees of 0.12%. It's got a yield around about 1.5%, which paid the dividend in April, but it owns about 1,400 shares, and we did top up £300 regular contribution during the month, but we've done it for a reason. It's got a return last 5 years of around about 9-10%, but it has struggled lately because of what's happened to America, but hopefully a short-term blip. Our second fund is a Legal and General Technology Fund. Had a great run last year, it struggled recently because of what's happened in America again, but it's £15,500. 10% of our portfolio, slightly higher fees of 0.32%, and it owns around about 250 shares. But we've done it again for the vision. It's got all the big players. But we've bought them funds and we will top them up because we want to just switch off. So it just goes to show, shall we say, if I can build a side portfolio, you can too. If you invest, shall we say, within a tax-free pension wrapper, you invest on a regular basis and you reinvest all dividends. It's not a quick restriction, but it just goes to show you can build a side portfolio if you create an action plan and you think long term. Remember to press the like button, subscribe to the channel, look at my blog, shall we say, and we'll see you in the next video.